Big restaurant earnings not on the menu today. Let's talk to Reuters correspondent Ernie Scheider. Ernie, McDonald's, you think of McDonald's as kind of always being there, always being successful in almost any economy. Not so. Third quarter earnings coming in below estimates, and this is the first time that global sales have risen less than 2% since 2003.
Has the magic faded for McDonald's? You know, we're so used to them being this big growth engine, especially the past few years during the recession. Why? Because if you got less money, you'll go to the McDonald's dollar menu or some of the other spaces as well. So what's really interesting to me, one of the statistics is McDonald's said sales at established restaurants grew at their slowest pace in more than 9 years.
Right.
So that sort of hints to me that maybe McDonald's has hit a wall, you know, as it tries to expand with the low budget customer as well as expand in niche spaces like high-end coffee with its McCafe brand. Right. Let's not forget some of its burger competitors like Wendy's are getting much more aggressive in terms of pricing, and some of its specialty competitors like a Starbucks obviously much more aggressive. So neither of these ends of the spectrum are going to take this fight lying down.
And McDonald's have done more advertising to try to combat that.
And the shows,
but
yes.
not to such great effect.
They're not entirely confident.
They're down nearly 4% today, and look across the board in the sector here, all red arrows.
And let's not forget, McDonald's competes with all of these, and it is such a huge company, and so it certainly is weighing on all these stocks.
Chipotle, which we know was famously Einhorned down by David Einhorn, the hedge fund manager, said that Taco Bell would basically eat its lunch because Taco Bell's coming out with a fresher line of food that's cheaper. It actually missed also on third quarter profit, down big, 14% today.
Yeah, I just have to make a quick aside. We remember that Chipotle used to be owned by McDonald's, and so it's sort of interesting that they're linked here today. So yes, Chipotle is not a big fan on Wall Street today. I mean, and Einhorn perhaps has a point. You know, Taco Bell has a very diverse menu. They're everywhere, you know. Chipotle is more of a higher end user experience. You know, you can go in, you can have your burger made in front of you, you can get a beer. But at the end of the day, it's still just a burrito place. And so maybe that's what Wall Street is saying. You know, look, is it overvalued? And clearly the stock indicates today that perhaps it is.
And you said you could have a beer there. Drinks, I believe, are part of what was down, as well as big to-go orders, maybe corporations not having big Chipotle parties.
Tightening their belts, you know, not spending as much on those Chipotle lunches.
That's right. Okay, let's move to the hot spot.
Let's check it out.
And talk industrials, the big stalwart industrials, the big conglomerates. Theme here seems to be, surprise, surprise, weakening in Europe. Let's go first to GE. Earnings met expectations, but overall revenue fell short, and they're down today over 2.5%.
So, you know, the revenue was the big thing here. I was talking to a GE shareholder this morning who said, look, yes, I was sort of pleased with, you know, kind of the meat/beat, depending on where your estimates were, but the revenue was something that sort of caught me back, you know. And so part of that was because last month, GE CEO Jeff Immelt came out and gave this sort of very positive forecast for revenue in the company's infrastructure unit. And that, you know, got a lot of analysts in a frizzy, and they're very excited. And so the shareholder admitted to me, he goes, look, you know, we perhaps were a little too bullish, you know, or too giddy going into this release, and we weren't tempered enough. But still, they were excited, and so to see these results today is definitely weighing on the stock.
All right, keeping their 2012 outlook, though.
Which is positive, and the shareholder said, you know what, I sort of like that they're maintaining that, and they're not changing that.
Okay, let's move on to Honeywell. Beat, 10% rise in quarterly profit. Again, weak demand in Europe, and the CEO Dave Coates saying there's a continuing challenging macro economy out there, which we know.
So there's two flip sides to being a conglomerate. Yes, you know, macro problems affect you, but also on the flip side, you're in so many businesses that you can be helped by small incremental things.
Right.
So Honeywell is in the chemical business, and it was helped, at least in the US, by low natural gas prices. And so that helped them beat, because natural gas can be used to make ethylene, which then goes into a multitude of chemicals out there. So that just sort of proved the strength of its portfolio.
Yeah.
But like the CEO said, it can't ignore the weakness that's out there right now, especially in Europe, which is a huge market for them.
Absolutely. Okay, let's move. They're up today 3%. Moving on to Ingersoll Rand, beat estimates again, let's say it a third time. Europe weak, Asia weak, it's a charm, all right. They're also forecasting a weak fourth quarter.
So fourth quarter, let's not forget, is also kind of the weakest cyclically because, you know, people will buy less big projects, you know, especially in the Northern Hemisphere. Who wants to move in the winter? Who wants to put a new wing on their house or do other large big projects that require a lot of capital? So it's not surprising there. I sort of look at Ingersoll Rand and I think it's kind of cool. They make locks, which seems like sort of a sleepy business, but you know, we've seen some positive data out of housing starts recently in the US and home sales. You know, if you got a home, lock it up.
You always need locks. That's
right.
Hang on to your house. Lock it up.
Exactly.
Let anybody take it away. All right, moving on quickly to the big board here, the market monitor. Let's just look at U.S. stocks. Everybody's down. Dow's down 150 points. Everybody's down over 1%. GE weighing on the down. Microsoft today weighing on the NASDAQ. So let's talk about Microsoft.
Yes.
As we move to our tech part of the show here. They're down 2.5% today. Big drop, 22% in profit. Barclays Capital cutting the price target on Microsoft.
In many ways, the results are sort of the proof point of an inflection of where Microsoft is right now. So a few weeks ago, CEO Steve Ballmer came out and said, look, I want to change what Microsoft is to sort of be this hardware-software hybrid like Apple.
Right.
And so today is sort of kind of the midpoint and showing just the trouble that they're going to have to get there, you know. The numbers show today that fewer
Easy
people...
enough to say we want to be like Apple. Now do it.
Right,
yeah.
exactly. Execution is another thing.
Yeah.
So they've got to convince people to buy more of their Windows software, basically, to get there. And today it showed that fewer people bought that Windows software. And let's not forget, they want to get to the spot where their software goes into their devices. They've got the Microsoft Surface tablet coming out soon,
right,
but they've got to get there.
Okay. Google, as we know, big news yesterday, huge tumble after they missed. And
surprise, it's early.
Surprise, surprise, surprise. At least 7 brokerages cutting their price targets today, and slowing sales in the ad biz. Is this a pause, though, before they fully transfer over to the mobile ads? What do you think?
Yeah, so mobile is sort of the big question mark right now for Silicon Valley. Facebook having an issue there as well with that. So Google has been wildly successful on the PC market, selling ads on its search engines. It's got to convince Wall Street that it can sort of do that on the mobile platform as well. They've got some sort of a leg up in a way because they just bought Motorola's handset business. They have the Android operating system. It'll probably just take them more time to put all the pieces together and really make it successful. Yeah. But for now, there is kind of weakness out there. Let's not forget, the economy, while not technically in a recession, is certainly not strong, and so they've got to contend with that as well. Fewer people advertising, perhaps.
Contending with foreign exchange rates, which are hurting everybody.
Exactly, yeah. GE especially mentioned that. We were talking about GE earlier, yeah.
Okay, let's talk about R.R. Donnelley, because they were the ones with the glitch yesterday with the press release, the printer that came out too early, the press release yesterday, which of course caused all kinds of chaos and began Google's tumble. Shares of R.R. Donnelley down, surprise, surprise, 2% today.
Yeah, so R.R. Donnelley, unfortunately, not good for them. They are kind of a traditional printer, phone books. But in August, 2 months ago, they bought Edgar, which is a service that helps companies comply with SEC and get SEC-related documents ready. Clearly here, they made a mistake. And so as you're just entering a business and you're trying to make a name for yourself or prove that you know how to run the business, not good when a company as large as Google, you don't do what they ask.
Bit of a PR gaffe.
Minor.
Minor. Okay, Ernie Schneider, thank you so much. Remember, everybody, follow us on Twitter at Reuters Insider, and we've got a lot of great shows on our YouTube channel. That's Reuters.com/Reuters TV. Have a great weekend. I'm Lisa Bernhard. This is Reuters.